In the previous week, there was very heavy volatility, and because of that very heavy volatility, we have seen very heavy swings intraday, more than 1% movement up down in the S&P 500, in the Nasdaq, and in the Dow Jones. However, this movement for the entire week was confined. Confined to what? Confined inside the high and low of the candle that was seen on Friday, October 10th. And I have discussed this in detail in my midweek update published on Wednesday. Now on October 14th, there were chances that the S&P 500 came so close to the closing of this candle. However, the low on October 14th was 6555. 6555. And the low of this candle is 6551. That is why in my first update I mentioned it came down very near to the Friday's closing 6552.51 and the low 6551, but was shy or reluctant to lose. This is why it retraced back and there was very heavy retrace. But the most important part of this movement was that the first hourly candle was a very heavy bullish candle, and it was a technical bullish candle. This means that now for the entire day on Tuesday, the S&P 500 will remain bullish. The bearish side will be restricted, limited. It will remain bullish. And then in my final update, I mentioned that if the S&P 500 closes in between 6654.71 and 664x, then it is a very heavy bullish condition indicating a gap up open tomorrow. Tomorrow means on Wednesday. And it is a perfect condition that can push the SP500 to the 6,700 range. So because of this closing at this mark, a gap up open was seen next day. Okay. After that, it moved up and it entered into the 6,700 range on Wednesday. But entering into the 6,700 does not mean that it will keep on moving up towards this mark. No, it will be limited to the 672x. That's it. Maximum bullish movement on Wednesday. Maximum up to 672x was allowed. That's it. And the high was 6724. And you can see exactly the same was mentioned in the first update. No matter what, the maximum will be limited or will be allowed to 672x. 672x. That's it. The S&P 500 failed on 16th because the S&P 500 failed to sustain above the 6,700 mark on the hourly closing basis. That was the primary reason of the failure. Yesterday and Friday, there were perfect conditions for a very heavy fall because yesterday on Friday, it was weekly, monthly and quarterly expiry. So there were very heavy chances for a fall and the S&P 500 came down, but it did not lose the 6,600 psychological mark. But the most important part of this, or the reason that why the S&P 500 did not give up, was the Dow Jones. Because if you notice, yesterday the Dow Jones was in open equal to low condition. And this was very much clear that there will not be any fall, any kind of fall, or any fall will be very much limited as long as the Dow Jones is trading in the open equal to low condition. That is why repeatedly I mentioned yesterday in my first update, then midday update, then the comments repeatedly that as long as Dow Jones is holding in the open equal to low condition and does not breach its open price, the fall in the entire market, including the S&P 500, will remain limited irrespective of anything. So now there is more bearish pressure on the S&P 500. Okay, bullish side, the S&P 500 is struggling and the entire market is struggling. So how it is going to work? What will trigger the bullish movement? What can keep the S&P 500, Dow Jones, these the indices bullish? And what can trigger a very heavy fall in the entire market in the next week? All of that I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of October 20th, means from October 20th, which is Monday, to October 24th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. In the first part, I will do the technical analysis on the weekly and the daily chart, and I will show you through the technicals if there is any pressure, bearish pressure, or if the bullish support is still there, how much percentage wise the market is bullish or bearish, okay, and the MACD and the stochastic RSI here in the first part. In the second part, I will tell you the probable movement of the market, means how the S&P 500, Dow Jones, and the entire US stock market is going to behave in the next week, whether there will be a gap down open, gap up open, to what level it will move up, okay, what will be the level zones, okay, when it comes down, what will support, each and everything in detail in this, the second part. So guys, it is recommended that you should watch both of these the parts, okay, the technicals as well as the probable movement in order to understand what is going to happen in the US stock market in the next week. So now I'm going to begin with the technical part. So now guys, this is the weekly chart. So I will first discuss the weekly chart, then the daily chart. Now let's first discuss the candle. So weekly chart means one candle represents 1 week, not 1 day or 1 hour. So this one candle means this is the entire week, okay, the previous week. Now if you notice the entire week, okay, this is the candle, the previous weekly candle, it's a normal bullish candle, and it is inside the body of the previous candle, the candle that was for the week of October 6th. It was absolutely engulfed. So this is the reverse engulfing, okay, so it was absolutely engulfed in this, okay, normal bullish candle. This is indicating that the color of this candle, that was red, means bearish, that there is bearish pressure on the market, okay. But because it has not breached the lower level of the candle, this is why the market, even though there is bearish pressure, the S&P 500 is still in a condition to sustain and to struggle. And if some conditions are fulfilled, then it will again regain the bullish trend, else it will not. So this is the candle of the S&P 500. Now this is the last candle of the Dow Jones. In this case, it is different because the Dow Jones actually breached the low of the candle. So it is also indicating the same. It is not indicating a gap down open or gap up open. It is simply indicating bearishness, means that on Monday there will be an initial or intraday bearishness, okay, because of the formation of the candle. The same is here, that on Monday there will be an initial or intraday bearishness, but a gap up or gap down cannot be confirmed here in this case. Now let's analyze the technical indicators. So in terms of the technicals, the S&P 500 on the weekly chart is bullish through the Bollinger Bands, bullish through the moving averages, bullish through the Ichimoku cloud, okay, on the weekly chart. But now when it comes to the other technicals, then S&P 500 is still bullish through the MACD, but if there comes a red candle, okay, or a good red candle, then the MACD will turn bearish, and this will happen after May 2025. This means that the bearish side, okay, the bearish side will be triggered. There will be a short-term bearish trend, okay. The stochastic RSI is bearish, and still there is no saturation, no overbought, okay, these are conditions are not there. So this means that the S&P 500 is 80% bullish on the weekly chart, okay. MACD is at the junction wherein we can expect that if there comes a red candle on the weekly chart, then there will be a bearish crossover, and then there will be the short-term bearish trend. If it try to move up, then just 1 or 2 bullish candle, it will again hit the saturation. So bullish side is getting restricted, okay, weekly basis it is getting restricted. Now this is the Dow Jones. In case of the Dow Jones, if you notice again, the Dow Jones is bullish through the moving averages, it is bullish through the Bollinger Bands on the weekly chart, bullish through the Ichimoku cloud on the weekly chart, and the MACD, yes, exactly the same. MACD is still holding bullish, but the stochastic RSI is bearish. Dow Jones is in the overbought condition. It is still in the overbought condition. It is not saturated, but the Dow Jones is still in the overbought condition. Okay, so now the Dow Jones is again 80% bullish on the weekly chart. So the weekly chart is 80% bullish, but again the Dow Jones is creating a problem. because the Dow Jones is still trading at the overbought condition, on the weekly chart. This means that the fall that we have seen recently, okay, on the daily charts, this fall can still continue. So one thing is clear, that there is bearish pressure on the market, okay, and the Dow Jones is still in the overbought condition. In order to help the S&P 500, the Dow Jones must come out of the overbought condition. And in order to come out, it must give a red candle. It must give a red candle, not a green candle, but a red candle. And when there comes a red candle next week, then the Dow Jones will be out of the overbought condition. A red candle in the Dow Jones next week means that the S&P 500 will have to trade in the 6,500 range. And when it breaches this the mark and gives a closing below this mark, then there will be more fall, and it can even enter into the 6,400 range. Okay, now it will be more clear on the daily chart. So let's analyze the daily chart. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. Now let's first discuss the candle. So this is the last candle that was formed on 17th of October, yesterday on Friday. It's a good bullish candle. However, the candle is not in a condition to trigger a gap up. Okay, but the candle is in a condition that it will allow an initial or intraday bullish movement on Monday. That's it, not more than that. Okay, and in case of the Dow Jones, well, there was the open equal to low condition in the Dow Jones. Okay, the candle is the good bullish candle. Okay, not heavy, just a good bullish candle, indicating an initial or intraday bullish movement on Monday. Now what we have seen on the weekly chart, that an initial or intraday bearish movement on Monday. On the daily chart, it is just the opposite of that, initial or intraday bullish movement on Monday. How it is going to work? It is going to work in a manner that if there comes a gap up open, then it will fall. It will come down, not heavily. Okay, that will depend on the condition, but it will come down. Okay, if there comes a gap down open, then it will move up. Means there will be a counter reaction to the open price. Okay, so in this manner it is going to work on Monday. Now in terms of the technicals, the S&P 500 is bullish through the moving averages on the daily chart. It is neutral through the Bollinger Bands on the daily chart. It is bullish on the bullish through the Ichimoku cloud on the daily chart. And the S&P 500 is bearish through the MACD on the daily chart, and it is bearish through the stochastic RSI on the daily chart. Now it is neither overbought, okay, not there is any kind of saturation. So the S&P 500 is 60% bullish on the daily chart. Okay, now comes the Dow Jones. Well, the Dow Jones is bullish through the Ichimoku cloud on the daily chart. Dow Jones is bearish through the Bollinger Bands on the daily chart. Dow Jones is neutral through the moving averages on the daily chart, and the Dow Jones is bearish through the MACD, and the Dow Jones is bearish through the stochastic RSI on the daily chart. So Dow Jones is more bearish on the daily chart as compared to the S&P 500, because the Dow Jones is neutral but in the bearish condition on the daily chart. Okay, now the most important part in both of these indices is that both of the indices, and also we can include the Nasdaq also, that these indices are bearish through the MACD and are bearish through the stochastic RSI on the daily chart. This is the most important part here. This means that the bearish pressure will still be there on the market. Okay, means bullish side will struggle. There will be struggle in the bull side, whereas bearish side is wide open and the market is allowed to come down without any problem. But again, any fall for now will be limited and will be restricted to the low of this candle. Only when there comes a breach, and a closing below the closing price of this candle or the low of this candle, then only there will be heavy fall, otherwise there will not be. And in the same time, in the meantime, if the S&P 500 breaches and closes above this price, then there will be the resumption of the bullish trend towards 6,800 range. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you informed through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. And guys, it is not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also give the opportunities in the premium stocks and the ETFs of the US stock market, of the S&P 500, Dow Jones, Nasdaq, the top 30 companies, the companies. So I give 50 to 80 opportunities every month. And that's not all, because I also gave the midweek update every Wednesday or Thursday. In this, the midweek update video technical analysis, I discuss all of the condition for bullish and bearish with the exact numbers, exact levels. So guys, if you also want to get the daily precise updates of the S&P 500 every day from Monday through Friday, as well as the stock market opportunities in the premium stocks and the ETFs 50 to 80 monthly basis, and the midweek update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this tab or this button which says membership options. And when you click on this tab or this button which says membership options, then you will see these the levels or these the tiers. And this is the daily S&P 500 updates. And in this tier, in this level, you will get the daily S&P 500 updates, levels, movement, and the all midweek update videos. This is the S&P 500 updates and premium opportunities, and here you will get the daily precise updates, levels, movements, all midweek update videos, and monthly 50 to 80 opportunities in the premium stocks and ETFs. This is the special tier, this is the special level. Whatever you are going to get here, by default you will get that here. Other than that, there will be a one-on-one Zoom video meeting. Through this Zoom video meeting, I am going to teach you all of these, the very special strategies, hacks, and these are technicals. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, pre-market analysis, first update, second update, midday update, final update, as well as the opportunities in the premium stocks and the ETFs of the US stock market, 50 to 80 opportunities every month, and the midweek update video technical analysis every Wednesday or Thursday. So guys, whenever you want to join my Patreon community, in order to get all of these, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the second part of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is going to happen in the S&P 500, Dow Jones, Nasdaq, and in a manner to the entire US stock market in the next week, means the week of October 20th. Means from October 20th, which is Monday, to October 24th, that will be Friday. Now, first comes the data and the earnings. So next week, Friday, the inflation data will be released. But if the government shutdown does not end, in that case, that data will not be released. Okay. But at the same time, if the government shutdown ends, okay, like on Monday, Tuesday, Wednesday, then whatever the data that was earlier supposed to be released, the non-farm payroll data, the unemployment data, the PPI data, the other very important data, then that will be released. Okay, either Friday or before Friday, okay, the day it ends, right? So if the government shutdown does not end, then there will be no data and the market will not follow. Now, other than that, Tuesday after market hours, Netflix will release the earnings. It will post the earnings. Okay. Wednesday after market hours, Tesla will post the earnings. Now, why the Netflix is important? Because Netflix means subscribers. Okay. Netflix tells us the health of the economy. Okay. Not absolutely, but in you can say in a very general manner, because if the Netflix says that there is the loss in the subscribers, okay, means people have cancelled the Netflix subscription. This means that the economic condition may not be good. Okay, then whatever is seen on Netflix, it will be then reflected on Meta, Google, and many other companies. Okay, because of this. Then comes Tesla. Now Tesla, because it has some good weight in the SP 500 and Nasdaq. Okay, so this is why a heavy movement in Tesla, bullish or bearish movement, heavy movement in Tesla will influence the S&P 500 and the Nasdaq, but not the Dow Jones, because Tesla is not the part of the Dow Jones. Okay, now let's talk about the numbers. Numbers. Okay, what we know about here in terms of the numbers. So see, this is very much clear. Okay, in my midweek update video also I mentioned, okay, this thing, these two, the S&P 500 will keep on trading in between these two, up down, up down, up down. Okay, until and unless there comes a breach, okay, this side or this side, and there comes a closing above. So the high of this candle was 676240. The all-time high was 6764.58 all-time high. The low of the candle was 6550.78. Okay, the closing was 6552, but now let us consider the 6550.78. Okay, only when there comes a breach, and a closing either above or below, then only there will be the bullish trend, bullish movement, or a bearish trend or a bearish movement. Okay, and if there comes no breach and no closing above or below these two marks, then S&P 500 will give these kind of heavy swings within the range 6764.58 and 6550.78. And this will continue. It can continue even for weeks, for months. Okay, until and unless this condition is satisfied. Okay, these conditions, bullish or bearish conditions, are satisfied. Okay, now what if the bullish condition is satisfied? If the bullish condition is satisfied, then S&P 500 will be looking for 6800 range. Okay, the next expected ATH is in the 6800 range. Okay, not in the 6700. If it satisfies, if it fulfills the bullish side condition, then the 6800 range will be there. If it's satisfied, if it fulfills the bearish condition, then the 6400 range, then the 6300 range. But in the short term, it will be looking for the 6000 psychological mark. Now, because this is a broad range, so what is going to define the bullish and bearish movement inside this range? So inside this range for the bullish and bearish movement, it will be the 666x and 664x. Okay, these are my two very heavy levels. Okay, these two will define the bullish and bearish movement, because a sustained movement above and the back-to-back closings above this means bullish side, means in between this, the bullish zone, and sustained movement closings below this, okay, means movement in this, the bearish zone. So we can divide this in two parts. This is the bullish zone and this is the bearish zone. Okay, in this manner the movement will be seen in the S&P 500. But now there comes a very interesting thing, a very important thing here. Now but guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now this interesting thing is that so far we know that the movement will be inside, okay, this is the zone, right? And then we have divided it into two parts, the bullish zone, the bearish zone. Okay, but now that the technicals have changed on the lower level charts and are bearish, okay, moving averages now here are trying to go bearish. Earlier there was bullish slip, but that bullish slip is gone. Now there is bearish slip on the lower level charts, means bearish movement. So if the market shows more weakness, okay, it trades red or it gives very limited bullish candles, then what will happen? Then in next 2 to 3 days, the moving averages will come into a condition that the moving averages will give a bearish crossover, and once there comes a bearish crossover, then MACD is bearish, stochastic RSI is bearish, and moving averages are bearish. This means that now nothing can save the market. Market will have to breach, to lose, to close below, and to go bearish. There will be good fall or heavy fall. Okay, but at the same time, the counter reaction, okay, or the opposite to this, if the S&P 500 keeps on giving bullish candles, okay, bullish candle means it does not breach this mark, okay, does not closes above the all-time high, but it keeps on giving green candles, back-to-back green candles or these, then there will not be any crossover in the moving averages. Then the lower level charts, okay, will trigger a neutral condition, technically it will trigger a neutral condition. And once the lower level charts comes into the neutral conditions, okay, and the daily and the weekly chart are in the bullish condition, then the bullish trend will continue, the bullish trend will resume, the S&P 500 will breach and close above, and then it will be heading to 6,800 range. But again and again, okay, I'm telling you, until and unless there comes a closing above the all-time high, okay, or there comes a closing below the low of this candle 6550.78, there will not be any bullish trend or bearish trend. It will remain, okay, this like this, up down, okay, very heavy swings intraday. This will keep on happening, okay. But then I further segregated this for you, that there is now this the range, this the zone. This zone will define whether there will be the bullish side movement or the bearish side movement, okay, and based on that zone, okay, this will be seen. But when we look into this, the Dow Jones, then the problem in the Dow Jones is that on the weekly chart, the Dow Jones is still trading in the overbought condition, not in the oversold. No, overbought condition on the weekly chart. The Dow Jones, okay, though it has held yesterday on Friday, the Dow Jones has helped the market to sustain and hold bullish, but because on the weekly chart the Dow Jones is still in the overbought condition, this means the pressure will be there on the market, okay. And this means that if the continuous closings are seen below this, the range, the mid range I mentioned, if the continuous closings are seen below, in that case there will be very heavy chances that the S&P 500 can lose the breach and close below, and then the bearish movement, fall, then it will be seen, it will happen in that case. And one more thing in the bearish side, once this the low is lost, that is 6550.78, okay, then there will be some good fall. In that case, the 6,500 psychological mark, it might not be able to hold the fall, because once it breaches this mark, then there is nothing left, okay, in the bull side. Then there will be more bearish pressure, heavy bearish pressure, then that will simply brought down the market, okay. 6,500 won't be able to hold. Under normal circumstances, 6,500 would have hold the market at least for 1 to 2 days, okay. But in this case, like for 1 to 2 hours, 3 hours it can hold, but not more than that, okay. It will be highly conditional at the 6,500, okay. Now yes, again the bullish side. So if you think that the bullish side is safe, now bullish side is not safe. Why? Because on the weekly chart the S&P 500 is very close to saturation. It is not saturated, it is close to saturation in a manner if there comes back-to-back green candles, okay, and there comes means even if there comes a breach and a green candle, okay, in this manner above the all-time high, then it will further push the S&P 500 to the saturation, okay. 1 or 2 technicals might even hit the saturation, then that will again create a problem to the entire market, okay. So this means that the bullish side, even if all goes well, then also the bullish side will be limited, okay. it will be the 6,700. It can enter into the 6,800, but as of now there is no continuous bullish movement allowed. Weekly basis continuous bullish movement, long-term bullish movement is not allowed as of now, neither through the technicals of the S&P 500 nor through the technicals of the Dow Jones. Now it is very much clear. Then comes the tariff war, then comes the comments of the president. Okay, so one day he said that there will be tariff. Okay, then yesterday he said that it is not sustainable. Then some other day he will say something else. Okay, so if the comments are continuously hawkish, then market will have to lose. If the comments are dovish, then the market can try to sustain bullish, but a confirmed bullish movement cannot be guaranteed. Okay, or a heavy bullish movement cannot be guaranteed, because technicals are not aligned in that manner. Technicals are not seen that the technicals can hold for long. Okay, in that particular manner. Okay, but the good thing is that next week there is virtually no data, because Friday the inflation data was supposed to be released, but because of government shutdown, if that continues, then it will not be released. Okay, without the data, market need not to fear. The Netflix is there. Netflix will clear whether the market will remain bullish or will trade bearish. Then comes the Tesla's impact will be seen on Thursday. Okay, but by that time Netflix earnings will be very much considered. Okay, so in this manner it will be very much clear whether the market will be heading to on the Monday itself. Okay, I will say Monday. The Monday itself, the movement on Monday, the closing on Monday will tell us whether the market is going bullish or bearish. Very simple. So guys, hit like if you have liked this video in order to appreciate, and your appreciation matters a lot. And please subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section.